But first, we're going to start with what Yellen told our Sara Eisen on Closing Bell yesterday about the stimulus, about the risk of doing too much versus too little. Here's what she said yesterday on Closing Bell.
We're hoping to see progress over the next couple of weeks in enacting that package into law. President Biden has had discussions with members of Congress on both sides of the aisle, would ideally like to see a bipartisan support for a package that we think is really what we need to deal with the pandemic and to get beyond it, get our economy back on its feet, and help all the people who've been so badly harmed by the pandemic and the economic havoc it's caused.
A great interview with Sara, David. And we've talked about the implications of that kind of stimulus, both intended and unintended consequences. I don't know if you've seen some of the Q1 estimates to GDP, but Atlanta Fed's now at 9.5. Goldman just went to 6. Morgan Stanley went from 3.6 to 7.5. So, I mean, whether you believe it's going to cool off in the back half of the year, first half of the year looks hot.
Yeah, it does. And then, you know, even some of those 22 numbers are quite strong. And that continues to be kind of the question. Will there be a real follow through? But, you know, Carl, I've been mentioning this during the course of our broadcast recently. I'll probably continue to. I mean, the conversations that I have with asset allocators, many of them hedge fund managers, usually include two topics. One, SPACs. Do you have one? Why don't you have one? I got to get one. I got to start one. I haven't started one. Oh, have you heard about mine? Can I book my guest on? We're de-SPACing next week. And then the other subject, of course, is are we going to run really hot? And what's going to happen to the market? Are we going to put a lot more money in a lot of people's checking accounts that's going to end up in the market? Is there going to simply be even more purchases, Leslie, of goods and services? Services in particular, of course, because that has been a lagging part of the economy, given people in certain places have continued to be locked down, or not locked down, but not doing what they typically would. And that's the question. And what will it look like in terms of the reflection both for economic growth and back here for what it means for the overall stock market and these pockets of speculation that we've already seen and drawn attention to? Yeah, Yellen addressed the inflation question, saying that she wasn't too worried about it and believes that the Fed has the tools to handle rampant inflation if it does rear its ugly head, especially given that it's run so low for so many years now. And of course, she would be in the position to know what tools the Fed has at its disposal, considering she, was the chair there for quite some time. Interesting that she is, also tying potential tax increases to an infrastructure bill. That's something that people were concerned about, especially as they look at stimulus and what it does for the budget deficit, the potential for tax increases, which she said would be gradual in nature, Carl. So, no real details on what form those tax increases could come in. But that's another thing to be looking for and potentially could have implications on some of this overheating that we're seeing as well with regard to the economy.
Shepard Smith here. Thanks for watching CNBC on YouTube.